Dear Financial Conduct Authority, you have failed. As the lead regulator of financial services in the UK, you are no longer fit for purpose and you need to be replaced with a more effective system. Strong words to kick off a video, I know, but I'm angry today to learn that the cost of compensating the customers of failed financial services firms has risen by nearly 50% this year to top £1 billion for the first time. The tipping point for me was a few years back when the total cost of compensation exceeded the total cost of regulation for the first time. But with these latest compensation forecasts, the cost of funding the Financial Services Compensation Scheme is now around a third more than the cost of funding the Financial Conduct Authority. It's utter madness. In this video, why even the head of the Financial Services Compensation Scheme says the compensation levy is far too high, and why this matters so much for every consumer of financial services in the UK. Spoiler alert, that £1 billion a year is coming out of your pocket. Hi everyone, I'm Martin Bamford, a chartered financial planner, personal finance YouTuber and money author. On this channel, I talk about personal finance, investing and happiness. I make these videos to help you become wealthier and happier. If that sounds like a great result, click on that little red subscribe button to become part of our subscriber community. It's completely free and you'll never miss an episode. While I make these videos to improve happiness, the news today of a £1.04 billion levy for the Financial Services Compensation Scheme, the FSCS, this year did nothing to contribute to my happiness. I'm going to start by running through how this system of compensation works, because it's vitally important to understand where this money is coming from and why so much money is needed. One of the benefits of working with an authorised and regulated financial services firm like my business, Informed Choice, is access to the Financial Services Compensation Scheme, the FSCS. You get access for compensation in the event of the business, the regulated business, being unable to meet its financial obligation. The FSCS was established by the government, but it is entirely funded by a levy on regulated firms. Each year we find out how much the FSCS is budgeting to meet expected compensation costs. The latest FSCS annual budget is an eye-watering amount and it's indicative of wider regulatory failure. For the 2021-22 financial year, the FSCS has forecast a levy of £1.04 billion. This levy represents a 48% increase on last year, and it means that regulated businesses such as ours will pay considerably more to fund compensation payments to the customers of failed firms. FSCS levies have long been high. In the past decade, my smallish business has paid out more than £500,000 in FSCS levies. That's a lot of money. So large is the FSCS funding requirement for the year ahead that they are planning to invoice the 1,000 largest regulatory fee payers with a 50% advance request, and that's going towards the levy expected in March 2021. That action is designed to ensure the FSCS has got enough money to pay for claims due before the main regulatory invoices are issued in the summer. We tend to get ours around July. Last November, the FSCS warned in its Outlook report that compensation costs for last year were actually higher than originally anticipated. The increased costs were largely due to the collapsed mini bond firm London Capital and Finance, as well as higher amounts paid out in pension compensation. The FSCS raised an interim levy, so as well as the annual ones, they do these interim ones just to keep us on our toes, just to surprise us. And it was an interim levy of £92 million in response to these higher than forecast costs. With such massive compensation costs forecast, some of the levy paying classes will breach their funding limits again this year. So to explain what that means, different types of regulated business, depending on the type of advice they give, the type of products they sell, are categorized in different ways. So pension providers should be paying for pension compensation costs, investment advisors should be paying for investment advice related compensation costs, etc. So different funding limits and different classes. However, because these limits are being breached for different classes, another class of levy payers, known as the retail pool, is going to have to put its hand in its pocket and chip in with an additional £252 million. While the situation in relation to FSCS funding is dire, they are also forecasting even higher levels of compensation in the future because more firms are going out of business due to the impacts of COVID-19. Since the onset of the pandemic in March, we've been asked by the FCA, along with other firms of financial planners, to complete 3 separate questionnaires about our financial resilience and the outlook for our business. When they published the results of their last survey, the second survey, they found that the situation for many businesses was really quite serious. They warned that 4,000 firms in the resale investment sector were at heightened risk of failing due to the pandemic. As well as tough economic times, there's also a further rise in complex pension advice claims and also the failure of self-invested personal pension SIPP providers. Some of these SIPP providers were allowing dodgy investments to be held in their pension plans, and they've not been able to keep up with subsequent compensation claims. So they fold, they go out of business, their liabilities get dumped onto the FSCS, and then the rest of us have to pay for it. Even the head of the FSCS agrees that this £1 billion levy is too much. FSCS Chief Executive Caroline Rainbird said ongoing trends in a number of classes and the widespread economic impacts of COVID-19 mean we are anticipating an increase in firm failures over the next financial year. This will likely lead to a rise in the volume of claims, many of which are complex, and therefore an increase in the levy. This annual levy ensures we can protect consumers, which helps to improve market stability and increases confidence in the finance sector. But we appreciate that the levy is far too high and that increasing costs could put pressure on firms' finances. We've also had a response to the news of the levy from Tim Fassam, who's Director of Government Relations at the trade body PIMFA. Tim said, in any other sector, a forecast for compensation of over £1 billion would be the focus of a national scandal. £1 billion of compensation represents £1 billion worth of financial loss, emotional stress, and economic hardship for thousands of UK consumers. We cannot continue to normalise this level of loss, accepting that the compensation scheme will hopefully pick things up on the other side. Every single person who has had to claim on the FSCS has received a poor outcome that it would be better to avoid. This is a further sign that the cost of compensation is truly out of control. This cost is a symptom of a system that fails both customers and the industry. To be clear as I can about this, consumers of financial services pay for both the cost of regulation and for the cost of failed regulation reflected today in this massive FSCS funding requirement. Where regulated businesses face higher costs, they have to charge more to their customers. Like Rishi Sunak was saying today, there is no magic money tree. We have an advice gap in this country. That is to say, there is a severe lack of capacity when it comes to advising and selling financial products. Products that help people protect against catastrophic events and products that help people save for the future so they don't have to work for their entire lives. Despite this lack of capacity and the ever-rising demand for quality financial planning advice, there's also a great deal of commentary suggesting that financial advice is too expensive. Some commentators, including financial journalists, say that we should charge much less for what we do. However, we are constantly faced with rising costs. FSCS levies are an extreme example, this £1 billion of cost, of the sorts of costs that we face, costs that we ultimately must pass on to our customers. Another significant cost increase in recent years, also fueled by regulatory incompetence and failure, is higher premiums for professional indemnity insurance. All regulated advisors are required by law to hold a minimum level of insurance, professional indemnity insurance. Our insurance policies have to meet certain standards to comply with the Financial Conduct Authority rules. Yet in the past few years we've seen a 5-fold increase in the cost of our insurance premiums, not because we represent any bigger risk as a business to our insurer, but because the entire market has become that much riskier to insure. Fewer insurers are today prepared to offer any cover at all, and with declining supply, prices must increase. The protection you receive as a consumer of financial services due to the requirements of the Financial Conduct Authority, access to an impartial complaints arbitrator, the Financial Ombudsman Service, and this safety net of the Financial Services Compensation Scheme, these are all positive things. But we've reached a point today where the failure of the regulator to regulate has become so apparent that there is really no alternative but for HM Treasury to step in. They should place the FCA in special measures. They need to reform the entire system to create one which doesn't squander other people's money in such a disgraceful way. Do you share my frustrations when it comes to the ineffectiveness of the Financial Conduct Authority and this outrageous £1 billion worth of FSCS funding requirement? Let me know in the comments. Please let me know that I'm not alone on this one. Thank you for watching this video. Until next time, I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.